Hi, good afternoon, good morning. Um, so I want to record this video in response to a question I was asked by one of my VIP clients um, around confirmation, trade confirmation. And what that simply means is what needs to happen around liquidity zones to validate trade execution. Now, you don't have confirmation when you've not yet had you've not determined your relevant move and relevant liquidity. So those two come first, right? Um, and after you've got your relevant liquidity price has come into it, that's when you're now looking for confirmation. And then after the confirmation has happened, you execute the trade, and that's when you now look at before you execute the trade. Actually, you look out for um, your relevant target, which will be an opposing sort of liquidity area. So that's the thinking. That's the sequence of thoughts here. And so let me just explain this quickly and some of the things that you want to be looking at. So, like the image has it here now, what I've represented that first candle is blue because it doesn't matter what color it is. It might be a red candle, it might be a bullish candle, it might be a bearish candle. The important thing that is that price has now come into a liquidity area, right? A relevant liquidity area, and it has rejected. So this is what that rejection is. So when you have the long tail coming away from that liquidity, in this case, this liquidity area is a bullish um, uh, a discount zone. So it's an area of unfilled buy orders. So you can see that price tapped into it, took some of that buy order, and then pushed all the way back with its rejection, right? On that time frame you're looking at. Um, so when you get this first candle rejection, then you get the second candle going bullish. It has confirmed that rejection, especially if that bullish candle takes out that a high, a prior high, right? Then that's confirmation, right? So that's one confirmation and rejection. And then the second one is when you have the bearish candle coming, it does not reject really. In fact, sometimes it even goes into that zone, but it doesn't reject. Now, the second candle, right, then becomes a bullish candle, and in certain cases it sweeps the low of that bearish candle, then closes bullish. And the confirmation, the completion of the confirmation is you get a bullish candle close above a high. That's it, right? Now, just let's consider this and sketch it out, right? Just as a sketch. You see this, if we want to say what this candle is, let's assume it's a bullish candle, right? So it means that that candle opened around there, went all the way down into the zone, pulled back and closed above here. Then the second candle then comes, maybe it went down a bit, but the reality is it then closed up there, right? Um, so that's what you can clearly see that that's a rejection. Because what's happening in reality is if you go to a smaller time frame, you'll see that you probably have some sort of, displacement going in, and then quickly a displacement is going out, right? And in most cases, you also have some momentum, signs of momentum, so fair value gaps, right? Also going in and going out of this, especially going out of that zone, right? In this second one, if we sketch it out, you still see as well that it's something exactly like that. So the bearish candle opens here, goes up a bit, then comes down, right? Comes into the zone, closes here, doesn't really reject. But then the next candle opens up there, comes down, sweeps it, and then closes up. Then why did I do that? Then um closes up, no, just gets to the high and then closes here. Then the next candle then confirms it, right? So what does that look like again? It looks like, a full displacement into the zone and then displacement out of the zone, right? And this is clearly the confirmation you need. So I always want to have a candle close above, in a bullish kind of rejection. Now, when you have a bearish situation, is similar. So you have this candle price come into that premium area, that liquidity area, right? And then rejects on that same candle. Then the next candle confirms it, right? So where you have, if you're going to sketch this, it will look something like if this was bullish, price opens, goes down, creates the low, then goes up, gets into the zone, then rejects, and closes here. I'm sorry, closes down there, right? And then the next candle might also go up, create a high, but essentially closes low here. So that is rejection. Displacement in, displacement out, right? And same cases here. So this candle is opens there, goes down a bit, comes, goes into the zone, um, and then closes here. When the next candle opens, sweeps that high, and then rejects all the way down and closes slightly up. Then the next one closes below it, confirming. So this close below here confirmed it. So that is the confirmation we're looking at. So if we take a look at price chart, right, this might give us some sort of clarity on that. So where's this trading view? Let's use my coaching template. Okay. We can even find us a setup that happened on Friday. So do you see this here? So clearly this is a bullish move all the way to this point here, right? Um, and is a relevant move. So it's pushing up, pushing up, pushing up. Right? And it's the structure there and as well here, right? But then take a look at what happened here. We have sign of um, momentum, fair value gap. And so when we mark that out, you can see what's happened there. So if we blow this up so we can see it clearly. So that fair value gap price first tapped into it, pushed out, so that was invalidated. Then price came down again. When that became invalidated, this low is now the area of liquidity. And so it is this low that price eventually now took and rejected away from it. So this is rejection. And then this confirms it. You can see this candle that closed above here confirmed it. And so um, if you were going to try and take a trade with this, then that would have been entry at the close of that candle, then stop loss at this low here for a typical aggressive entry. You could go for the another low swing low, but there's no swing low apart from that down there. It's too far. All right. So the price has proven to you that it's rejected away from an area of liquidity, so area of unfilled by orders, and then it took off. And so let's see whether we get 2 to 1. Definitely we will get 2 to 1 because we're already 1.4 to 1. and price got all the way up here. So we're hitting almost, yeah, we hit 3 to 1 even on this, right? So, so that's an example of a bullish situation. Um, let's see if we get a bearish situation as well. Um, on that Friday, you can see what price did on Friday. So this was, remember, liquidity, external and internal. This is external liquidity, isn't it? Right? External liquidity, price tapped into it, rejected. Then the next scan, in fact, you can even say the same thing as here. It rejected and then confirmed, right? And so if you're taking this trade, you could have taken a trade here. If you had put your stop loss here, you'd have been taken out. Then you got another confirmation to enter. So either of this would have been a good trade in the end. Um, So this one here, if we took this one, this tap in here, this rejection, so sweep the high, reject. This would have been an entry. And in reality, this kind of situation, I'm asking myself if the stop loss allows me, and I want to really have my stop loss around this area here, right? Um, that would have been okay for the first trade, but this second one, I'll probably leave it here because it's proven twice now, it's rejected away from it. So that would have been the entry there. Stop loss is 7.8 pips. Let's see if we got 2 to 1. I think we did. Yes, there was 2 to 1 in that trade, right? So, yeah, so that's it. As an example, another instrument. Let's take us another instrument. Let's take something like US oil. I don't trade it, so um, but let's see if we get the same sort of effect as well. So there was no sweep at that point, but there was this sweep here later. Um, and then we didn't get a clean confirmation. I don't like this setup here. The setup is not good. It's too springy. But we have this bearish move here. So where is this a bear is this a relevant move? Right. So we had the swing. So you see this point here is a swing. So it's a structure, and then price came all the way down here and broke that structure. We had a close below here. But then we had the reason why it's a relevant move is it broke off, sorry, the break of structure as well as some imbalance, right? And so when that happened, we then get price tapped into it, rejected. It came back up again, right? Still respecting, and then we get the confirmation here. So this is the confirmation that we will be using here. Folks that trade this, I don't know if this is an okay stop loss, a typical stop loss, but yes, um, that's your stop loss there now. And let's see whether we got a 2 to 1 on this. Price is quite choppy on this, um, and there was a 2 to 1. Eventually, the price was just too choppy, kept coming back and forth. You might have gone out of this trade um, by the way, the choppiness, but eventually got to the 2 to 1. Just hold your stop loss because of the choppiness of this instrument. um, the price will respect it. But then you can see where price was heading. It was heading to this area, which for some reason I think I used this before. It was mapped out. Let's see what time frame that would have been on. Okay, so that would have been, yeah, it's a daily time frame. So price was heading towards that daily time frame, that zone, this zone here. So that would have been a good place to actually even put your take profit. So there was about 2.5 to 1 there. Um, So this is price tapping into here. Oh, this tapping in is you shouldn't have been using this because this is already spent. But you can see this price comes in here, right? Don't know whether this is the first time it came in there. Yes, it's the first time it came in there. So any opposing bearish zones will be dodgy. Just watch it. Don't go for it with all your power, right? Instead, be looking for a bullish setup um, on this. Yeah, let's see whether we had any. So we had this. We had some. So there was this swing here. You can see the swing here. Price broke. So low that led to a high that broke structure. Now you could have chosen not to enter this trade here. It's still okay, but the reality is the rule is the rule. Structure break is and we have fair value gap here, so it's a relevant move. Price comes into it. You can see this price that came into it did not reject. That did not reject, right? But then the next candle swept that low and closed up, right? Um, and so what do we get from there? So that is once it closed, that would be the entry. You can go stop loss here for toppiness, or you can go stop loss here and more aggressive. And what do we get to that? Already 2 to 1, and there's more than 2 to 1 on this trade. If we just held that position, and this is the the M15 time frame. If you looked at it from H1, then you could have held this trade. Could have held this trade all the way up. Keeping a watch on all these relevant targets. You got to keep an eye on all these relevant targets and not expose the nice thing that you've already achieved. So there was like what 7 to 1, 8 to 1. It was 8 to 1 on this. It was 8 to 1 on this setup, man. Where's my yeah? There was 8 to 1 on this setup. Yeah, 7 to 1. That's quite good. And there would have been opportunity for multiple entries, by the way. There were once price starts to go in that direction, um, then there are opportunities for even more entries. So there was an entry here. There was even so I got in here. There was another entry here. There was another entry here. There was another entry here. But whether you want to be entering at this kind of it, you gotta watch it, right? So there was the opportunity. Okay, without this video getting too long, I hope that kind of explains the confirmation um, and the way I look at confirmation. Okay, all right. Till next time. Take care.